Market Mindset AI, riding the market wave, boom or bubble. Welcome back to Market Mindset AI, the podcast that keeps you sharp, savvy, and ahead of the investing curve. I'm your host, Big Money Mike, and today we're diving into the red-hot markets of 2024 and what lies ahead in 2025. With booming stock performances, an AI-powered rally, and whispers of a market bubble, there's no shortage of drama to unpack. So grab your coffee, buckle up, and let's break it all down. Let's kick things off with a victory lap for the S&P 500. It's been on fire, folks. The index clocked a 23.3% gain in 2024, following a stellar 24.2% in 2023. That's a cumulative two-year rise of over 53%. Numbers like that haven't been seen since the late 1990s. Tech heavyweights like Nvidia, Palantir, and Vistra Energy have been stealing the spotlight. And don't forget the Magnificent Seven, the market-dominating giants that propelled tech to new heights, with their collective valuation crossing a staggering $18 trillion. What's behind this rally? It's a mix of AI innovation, aggressive interest rate cuts by the Fed, and renewed market optimism following the 2024 elections. Tech adoption, particularly in AI, has become a game changer. Companies are scrambling to integrate AI into their operations, driving up demand and stock valuations. But here's where it gets interesting. With all this excitement, are we heading for another golden age, or are we dancing on the edge of a bubble? Now, let's talk about the warning signs. Analysts are raising eyebrows at the Shiller PE ratio, a key valuation metric. It's nearing levels not seen since the dot-com bubble. That's right, folks. The last time things were this frothy, many investors got burned. Sure, high valuations aren't inherently bad, but when they're driven by speculative euphoria, you better tread carefully. And then there's inflation. The Fed cut rates 3 times in 2024 to stimulate growth, but inflation remains stubbornly high. This creates a tricky balancing act for policymakers. Do they keep rates low to fuel growth, or do they tighten the screws to control inflation? Either way, uncertainty looms, and markets don't love uncertainty. Speaking of uncertainty, let's shift gears to strategy. If you're sitting on gains, it might be time to reassess your portfolio. Diversification is your best friend right now. Dividend stocks like Philip Morris, yielding a reliable 4.5%, can provide stability in turbulent times. And for those willing to take on a little risk, option strategies are becoming increasingly popular for navigating choppy waters. But what about the big picture? Experts are split. Some strategists predict the S&P 500 could climb to 6,600 by the end of 2025, fueled by strong earnings and continued innovation. Others foresee a flat or even negative year, warning that the market is overdue for a correction. So, what should you do? First, take a deep breath. Investing isn't about timing the market, it's about time in the market. Keep your goals in mind, stay informed, and don't let emotions drive your decisions. Before we wrap up, let's quickly touch on the broader economic landscape. Hiring trends remain strong, and GDP growth is impressive, painting a picture of resilience for the U.S. economy. But there's a storm cloud on the horizon, the potential for a shallow recession in 2025. While it's far from certain, it's something to keep on your radar. And finally, let's not overlook the role of narratives in investing. The stories we tell ourselves, whether it's the promise of AI, fears of stagflation, or political shifts, shape market behavior. As an investor, it's crucial to separate the noise from the signal. All right, folks, that's the pulse of the markets. Whether you're riding the AI wave, hedging against uncertainty, or seeking out value plays, remember that investing is a marathon, not a sprint. Stay curious, stay flexible, and always keep your mindset sharp. Thanks for tuning in to Market Mindset AI. This is Big Money Mike, reminding you to stay savvy and stay in the mindset. Catch you next time. This content is not financial advice, and it is a summary of news articles which was produced by AI.